Hey guys, welcome back to this channel. In this video I'm going to be walking you through the best supply and demand strategy you could get out there. This is something you'll be willing to learn. Make sure to stick to the end of this video. So guys, welcome back, and today let's talk about supply and demand. And if you haven't watched any of my video, or this is your first time on this channel, make sure you subscribe to this channel and turn on your notifications, because we'll be dropping videos like this time to time to help you get better with your trading skill. Now, to understand supply and demand, the first thing you want to do is to understand my candlestick formation. And if you haven't seen the candlestick formation, please watch the candlestick formation video. It is right there on my playlist. You can go check it out. You can search and you're gonna find it on my playlist. Now, the first thing you want to understand about supply and demand is what exactly it is. Now, this is just very simple and easy to understand precisely. Okay, a supply is an area where what people intend selling, and a demand is an area where people intend buying. Okay, if there's an high demand of a particular currency, we're going to see a buy. If there is a low demand, or let's say if there are no much demand in that currency, we're obviously going to see a sell, because people want to go into other currency or probably do something else with their money, and automatically the market will start going down. A lot of people out there are going to sell off that currency, that coin, whatever you want to call it, but they are going to sell out that stuff with them. Okay, now since you already understood that very well, let's understand how supply and demand works in the trading system and how you can apply this to your trading system to bring out a very top-notch result in your trading. Okay, now the first thing you want to understand is the smart money concept. After you've understood, or rather the second thing you want to understand is the smart money concept after you've understood the candlestick formation. Now, if you don't have a clue about the candlestick formation, let me just walk you through. Now, let's say a market at this area made a break of structure to the downside, or probably a change of character, whichever way. Now we indicate that this area is a potential sell. So let's just call here a change of character, and we indicate that this is a probable, or this is a sell projection in the market. Let's just say this is a sell projection in the market. So we do expect prices to at least rally up to this area and probably do one of our patterns that we have discussed in the past and keep coming down to our intended direction. Now, to use this candlestick pattern, you have to understand something. This candlestick formation helps you know when the market is actually going to do, or actually going to see a reversal rather, and it helps you understand the last low in the market and the last high in the market. Okay, so it's very simple to get this pattern. Now we want to understand that this area went low and went up. Okay, now this is a bullish break of structure at this point, looking cool. Now if we're looking for a very nice reversal or a very valid reversal, we can call here a change of character, a break of structure, whatever you want to call it. The first thing we want to do is looking at the last candle, and we are waiting for 3 candles below it if we are looking for it to demand. But if we're looking for it to supplies, we're going to be looking at the last candle after the thing broke down or formed a coach this way I explained for the sell, and we're going to be looking for 3 candles above the last candle. So once we see 3 candles above the last candle, we will know that we're going to have a reversal, most likely. Not just most likely, in 80 to 90% of the time these things are going to appear, we're going to have a reversal, because I've studied the chart for a very long period of time and I have seen this thing consistently in the market, and that is what usually comes out from that candlestick formation. So let's see it in the real life as well. So once it broke out the structure, we can see that, let me zoom it very well, we can see that we only had just one. Okay, we did not have the 3 candles after this last high. So that shows that there's no reversal right now and everything remains a single structure as long as we don't see that. Okay, now we continue heading up to this area. Let's say this is the last one, or let's not just say, but this is just the last one. Then we're looking for that 3 candle down. We saw 1, we saw 2, and we saw another one up again. Okay, and after that we had 1, 2, 3. Immediately we had these 3 candles, or the 3 candle formation. We had a reversal down to this area. Okay, that caused a very perfect demand. Okay, so once you understand this, and that's good for you. Okay, so if you don't understand this, you can go over this video again and understand it. It is very simple. We just want to see a 3 candle after the last candle to confirm the reversal. So even if it doesn't come to any of our other blocks that we have listed below this area, it is still a valid reversal. You can watch my market structure video to also understand this better. I'm going to tag these 2 videos at the description of this video so you can check them out for yourself to have a very good and clear knowledge about these things. Okay, so it's just that simple. Now let's now understand what a supply and demand is in general. Okay, so if we have a bullish structure this way, we are expecting a demand to the downside. Okay, so what are we going to do to approach this situation right now? All we need to do is to take our Fibonacci 2 after we've confirmed the candlestick formation. We take out the Fibonacci 2 and we actually want to see a buy around this point here. We want to see a buy around the 50% and the 82%. Those are the most valid zones you can get it over long term. Okay, so once you see prices at this side, then we want to actually implement our entry models. I have a video of entry models on my playlist as well. You can go check it out as well. It's going to explain everything you need about the entry models and how to execute the trade. And that's something I want to chip out in this video. If you've been following my video consistently, you should be able to find your way around the forex market by now, because I make very and well tailored videos that could help you scale through this forex trade. So if you haven't been following my videos, make sure you follow my videos. Make sure to listen attentively. Don't just watch it for fun. You can take a pen and paper, you can jot things out, you can save the video, download the video, you can rewatch the video and stuff like that. Just make sure you understand these things and make sure you've back tested these things for a very long period of time to get a very valid accuracy in this trade. Now, I haven't said that this is how a demand, or this is what we'll be looking out for a demand setup, and for a supply setup we would be looking out for prices to reverse to any of our zones on the Fibonacci 2. Okay, sorry for that, on our Fibonacci 2, and start going in the intent direction. Okay, so if you don't have the Fibonacci setting, I also have a video on Fibonacci. You can go watch that as well. You should be able to get the setup there and you can do yours that way, because that is one of the most valid and it has a very quick response to the market setup. Okay, now having said that, let's take some supply and demand in the market. Okay, for the Euro USD, I do like using the 30 minutes time frame because it is one of the most cool and valid time frame you can actually find cool supply and demand. So let's just look for little supply and demand, then we call it a day with this video. Now I said to get a very valid buy, or a very valid should I say valid break of structure and a valid change of character, you actually need to see the last candle, and I said 3 candles above or below depending on what you are looking at in the market setup. So let's just look at something now. Let's say this is the last low we saw 1, 2, 3. Anything that goes below this is a valid break of structure. Okay, so if you don't understand that, you can watch most of my videos. I have all these things explained there, but we're still going to explain it here again for those that are unable to catch up with these things. Okay, now what are we going to be looking for in this market? We're going to be looking for valid reversals. Okay, now the first thing you want to do is to look out for valid reversal. You want to see 1, 2. I told you if we just have 1 below it and we have the next one above it, it is still a valid reversal. So everything that happened here is still valid. So what do we do next? We take out the Fibonacci 2 and you get your point. So this is a very nice reversal zone to catch up. Okay, so let's take that and let's say this has been mitigated. Okay, let's call this a mitigated area. So I'm also going to zoom to the lower time frames to check out this as well. And this is also a nice mitigated area as well. So we're going to call these both areas mitigated areas. Okay, that's a nice mitigated area. Then anything that goes below this is a nice break of structure. So we are still supplying at this range as well. So until now we are still supplying. Okay, so if we break above here, the next thing we'll be looking out for is a demand. Okay, so we broke above here is a nice break of structure, or a change of character rather. This is a nice change of character because we already had a break of structure here. So this is a nice change of character. So since we did not get any setup there, it becomes a cool another change of character. So we have change of character continuously. So look at this area looking cool. 1, 2, 3. Okay, but now when you're looking at this right now, you can see that if we hop up on our Fibonacci 2, we didn't get to any of our area. But since we still have the valid candlestick formation, it is still said to be a valid break of structure as well. Okay, so this is still a valid break of structure as well. And you need to be mindful of your candlestick setting. You can see this is just 1. So, and we came down to this area, 1, 2. This is a fake out, then 3. Okay, let me just zoom it very well. Okay, let's say this is the last one. Yeah, this last one, no one came lower than this. Then we had 1, 2. There's a fake out, then the next one up. So since we have that, we can rule out our Fibonacci 2 and get our zones classically. Okay, we got our zones here. So we got at this level. So we could take cells here. We could take cells here. Nice cells at this point. And we could also head over to this side and take nice cells as well. Okay, we could take cells here as well. Okay, so this is just how the supply and demand chain works as well. And you're going to be seeing trades very massively with this strategy. All you need to understand is the candlestick formation and how these things work. And the next thing you want to do is enter into any time frame that you prefer for your entry models and use the entry models I told you to to actually execute the trade as well. So it's just a simple thing about supply and demand. All you need to understand is the candlestick formation and when a supply is about to be formed and when a demand is about to be formed, and also use the Fibonacci tools to explore your best zones you want to get. You want to catch up your supply and demand. Okay, and this is just one of the perfect, and that's something about this strategy you don't know. This strategy avoids it helps you filter out liquidation. Okay, liquidations are fake out places that are not valid. If you use this candlestick formation, you should be able to filter out places that are not valid. Let's just look at funny places that occurred in the market that will most likely liquidate people. You see, places like this will most likely liquidate you. Places like this will most likely liquidate you. Places like this will most likely liquidate you. Why? Because this is the beginning of that stage, and a lot of people want to take you as a supply, but they're going to be matched out of the market. This is the most valid place, and this is still a break of structure because we haven't taken out this recent low at this point. So we are yet to confirm this area as a very good setup for sell. Okay, so these are These are areas that might have liquidated people. But if you follow my principle, you follow my rules, you are going to avoid this area, and you don't need most of the liquidity lectures people are telling you out there. And you'll be catching good zones that are nice. You can see you catching good zones, yeah? You're catching nice zones that are right. Okay, if you've been using my template, okay? I can do thousands of these things for you, and I'm going to catch nice zones. If you want me to do that, I can do thousands, millions of these things for you, and you're going to catch nice zones. As you can see here, we had a very nice change of character, the zone. Now let's look out for the candlestick formation. We had 1, 2, 3 positive reversal from that area, and we had this nice checkout buy here. Okay, so if you've been following my principle, you're going to be catching out nice zones, and this is how the supply and demand. Should I call it food chain or what? All right, whatever you want to call it, but this is how it works in a real sense. So if you be using this my own template, you should be able to catch nice supply and demand zone. And that'll be all for today. Catch you guys next week. Make sure you rewatch this video and understand everything about this video, and make sure you backtest this strategy to get positive results. Catch you guys next time. Bye for now. Make sure to subscribe to this channel. Don't forget that. Catch you next week. Thank you.